Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll be discussing another illustration which will be referred to the problem on method 3, rather method 3 being used for preparation of account current. Now this method 3 is basically also known as periodic balance method. This is a very simple method to understand. However, it is a little tricky to solve. The reason being there is a lot of calculation that has to be done. However, the calculation doing part, or rather completing the calculation, is really easy because you have to follow a structured analysis, and according to that you have to go ahead and make the preparations then. So let's mention the first requisites of it and then we'll go ahead with the illustration solving. Now the prerequisites have been mentioned here. Let's read it out. The first thing that you have to mention is whether that specific transaction is a debit transaction or a credit transaction. That means whether you are receiving the amount or whether you're paying the amount is something that you have to make sure of. Post which there are three more things that you have to take care into consideration. You have to figure out the number of days. Now that is calculated from the current date until the next transaction date. For example, if the current transaction happened on 1st of January and the next transaction happens on 28th of Jan. So the days in between these two transactions is the number of days for that first transaction. That means 1st of Jan transaction. So you have to go into that chronological order. The reason why I mentioned that this is a structured analysis is because you have to follow that specific order itself. You cannot skip out anything. Now post this, you have to find out the balance. Now if the transaction, the reason why we mentioned whether it is a debit transaction or a credit transaction is to understand whether it is adding up the balance or subtracting the balance. So on that specific day, whichever transaction you're dealing with, whatever the closing balance is after adding and subtracting the previous transactions of the upper ones, that will be multiplied by the number of days that you have figured out, and that will be the debit transaction total if the transaction is relating to the debit side, and the credit transaction total if that specific transaction is related to the credit side. So accordingly you will get debit product or credit product. Once this is completed, then you go ahead with the interest calculation part. Interest has to be calculated both on the debit product total and the credit product total side. Whatever balance is left on the debit product total and credit product total, that has to be taken into consideration for calculating the interest. The net interest will be taken into consideration. Now when the interest is due from customer, it will come as to interest account, and if we are supposed to pay it to the customer, that means interest is payable, then it will come as by interest account. So these are the prerequisites of this specific method, that is periodic balance method or by means of product balances method. Now apart from this, we'll go ahead and solve the illustration first, but before that note down the illustration for your reference so that you can solve that time. Now the illustration has been mentioned here for your reference. Let's read it out. On 2nd of Jan 2016, Vinod opened a current account with Allahabad Bank Limited and deposited 30,000 in it. He further deposited the following amount that has been mentioned below. 15th of Jan he mentioned 12,000 as an amount. 12th of March he deposited 8,000. 10th of May around 16,000. Apart from that, he made certain withdrawals as well. 15th of Feb, he made a withdrawal of 26,000. 10th of April, he made a withdrawal of 30,000. 15th of June, he made a withdrawal of 4,000. 15th of June, he made a withdrawal of 14,000. Now, if you can figure out there, with the transactions have been mentioned as deposited and withdrawal, you can clearly state that every deposit is a credit transaction, whereas every withdrawal is a debit transaction. Now the difference that you have to make sure here is that you have to arrange these transactions in a chronological order. So name it as per the date or the transaction. Accordingly, you will be able to understand how many days are there between them. So here in the question itself, we'll start numbering it out. So first transaction will be for 15th of Jan, second transaction will be for 15th of Feb, third transaction will be for 12th of March, fourth transaction will be for 10th of April, fifth transaction will be for 10th of May, and sixth transaction will be for 15th of June. So accordingly, you have to go with these transactions itself. So that's how you'll be able to figure out the balance for every specific transaction. that means adding up the credit transaction, and then if there is any subtraction, that means withdrawal or debit from that balance, then it has to be adjusted accordingly. You'll understand when we go ahead with the problem solving of this illustration. However, let's go further with the details that have been mentioned down here. So we have to show Vinod's account in the ledger of Allahabad Bank. Now interest has to be calculated at the rate of 5% and 2% respectively. 5% will be on the debit balance and 2% will be on the credit balance. Account has to be prepared as of 30th of June 2016. Let's go ahead and prepare the actual format of this. So the format has been prepared. We have date, particular column as mentioned. We have the debit and credit column, that means whether the transaction refers to the debit side or credit side. The amount has to be mentioned here respectively, and the next column refers to whether the transaction is a debit column or a credit column. Then the balance, that means whether adding up or subtracting that amount gives you the balance exactly, that's the closing balance. Then next column is days, that means how many days have been passed from the current transaction to the next transaction, or rather how many days will be there from the current to the next transaction. This is the sole reason why we prepared the chronological order, or rather why we numbered it in the first place. So this will figure out whether we have the debit product or the credit product here. So let's figure out with the illustration that will be solving here for Vinod account. So this is for the year 2016. Let's go ahead with the first transaction. Now the first transaction, or rather we'll just mention the amounts first, or rather the transactions first, and then we'll go ahead with the preparation of other transactions or other columns. So let's just note down the transaction, whether it is in the debit side or in the credit side. Now on Jan 2 we had opened up the current account with a credit balance of 30,000, so hence it has been mentioned. Let's understand, or let's write down all the other amounts here. So here we have mentioned all the transactions in the chronological order. Now let's go ahead and figure out the number of days first. We have also filled up the debit and credit column. Now we'll go ahead and figure out the number of days here. So if you can see, for Jan 2 until the next transaction happened on 15th of Jan. That means the difference between 15th of Jan and Jan of 2 or 2nd of Jan is 13 days. So 13 will be mentioned here. Similarly, when you go for Jan 15, the next transaction after Jan 15 will be of certain date. That will be of Feb 15. So totally you have to calculate how many days are there between Jan 15 and Feb 15. Let's calculate that. So 15 days of Feb and 16 days of Jan gives you a total of 31 days. That will be for Jan 15. Now for Feb 15, the next transaction occurred on March 12. So we have to calculate how many days for the month of Feb and how many days for the month of March. March by default 12 days, and another 28 minus 15 gives you the number of days for Feb. So that will be 25 days. Similarly, we'll go ahead for the next transaction, March 12th. So for March 12th, the next transaction happens on April 10th. So how many days between that is what you have to calculate. So for March, we have 31 days in March. Out of that, 12 days is already subtracted. That means 19 days for March and 10 days for April. That will have a total of 29 days. Now for April 10, and the next transaction happens on 10th of May. Let's calculate how many days between that. 30th of April. April has 30 days. Out of that, 10 are already subtracted. That means 20 days here. So 20 days of that and 10 days of April gives you a total of 30 days. Now again, for next, that means May 10th, the next transaction happens on June 15th. So let's calculate how many days for May. 31 minus 10 will give you 21 days for May plus 15 days of June. 36 days in total. Now here, for next or the last transaction, June 15th, the accounts are closed as of 30th of June. So from 30th, or rather from 15th of June until 30th, how many days? We have to calculate that. So that will be 16 days. Now how the total comes to 16 is because you have to calculate the day of 15 as well, because there is the last transaction and that's the end of it. So here, every time whenever you go to calculation of the last transaction, it will be the day including of the last transaction as well. So 30 minus 15 gives you 15 plus 1 of that same day, that will give you a total of 16. Here we have mentioned the balance. Now, or rather we have figured out how many days do we actually have. Accordingly, we'll figure out the balances now. Let's start with the closing balance of credit that we had for 30,000. So on 2nd of Jan, we had a closing balance of 30,000. The next transaction is also credit transaction, which is for 12,000. That means it will be adding up. So in that 30,000, you add another 12,000 and whatever balance you have, you mention it there. That means 42,000. Now, before the next transaction for 15th of Feb, whereby there was a withdrawal. So out of 42,000, you have already withdrawn 26,000 now, and whatever balance is left will be mentioned in front of or in according to that transaction here. Now for the next transaction, there is again a credit of 8,000, so add it to the 16,000 balance. Now out of the 24,000, you withdrew another 30,000. That means 6,000 additional has been taken off, which will be a negative balance. And then you added 16,000 another as per the credit transaction. However, 6,000 were earlier withdrawn additionally, so the balance will be 10,000 only. And then another 14,000 were withdrawn. That means 4,000 negative balance has been mentioned here. Now, how to figure out the debit product and credit product total? So if you can see, we have mentioned the transaction details, whether it's a debit transaction or credit transaction. So if you have to figure out the debit product, that means anywhere where debit has been mentioned, that will be multiplied by the number of days. Let's take for an example. Here debit has been mentioned. In corresponding to that amount, what is the debit balance, or rather what is the balance and how many number of days has been mentioned has to be taken into consideration. So that will be 16,000 is the balance that was there multiplied by 25 days. Let's calculate how much it is. So now that we'll be going on the debit or credit side of this transaction, we'll understand how this credit transaction works. Wherever the bracket has been mentioned, that means that's a debit transaction. That means the balance has gone into negative. So whenever the balance has gone into negative, you'll be mentioning it as a debit transaction. And wherever the balance is in positive, that will be a credit transaction. That means the balance is still in your account. So consider that as a bank account basically. So here, when you have to go ahead and figure out the total, we'll have to mention it something like this. For the debit transaction, which has been mentioned first, that means 6,000 is the balance here, and that will be multiplied by 30 days. That will be the total on the debit product. That will be 1,80,000. Similarly, the next debit transaction that we have, or rather the next debit balance that we have is 4,000, whereby the balance went negative to 4,000. That is multiplied by 16 days. That gives you a balance of 64,000. The rest credit transactions can be directly multiplied and put forward to the credit product. So here we have finished entering all the details in the debit and the credit product. Let's make a total of it. So here we have calculated the debit product total as well as the credit product total. Now we have to calculate the interest on this. If we've mentioned in the question, interest will be calculated on the debit balance as 5% and credit balance as 2%. Let's figure it out. So the credit total is 31,48,000. If you multiply it by 2%, because that is the rate for credit product, that will give you a total of 61,280. That will give you a total of 62,960, which is for the all months, rather we can say 12 months per annum total. You have to calculate it for 1 day. Divided by 365, you will get a total for 1 day. That means 172.49 is the credit total. Let's calculate it for debit now. 2,44,000 is the debit product total. If you multiply it by 5%, we'll get an interest of 12,200, which is for 12 months. Divided by 365, you'll have the total for 1 day, which is 33.42 rupees. That means credit side is more than debit side. Hence, the balance will be mentioned on the debit side here. Let's figure it out. So that means credit side is more. You have to give out, or rather we can say we have to use the totals, or that means the thing that we mentioned there, whether we have to give it to the customer or take it from the customer. So this is basically the interest that we have earned here as an account current. Hence, we still have a customer balance of 3860 mentioned down here. So you have figured out the total balance of debit and credit side, which is 70,000. Make sure the interest that is received or rather credited gives you an amount of the debit balance. If you can see, we have a negative balance of 4,000 earlier, out of which 140 is a credit. So when that balance is deducted, you still have a negative balance of 3860. That means credit side is less as compared to the debit side. Debit side is on the higher side by this amount. So that balance will be mentioned on the credit side, and that will give you a total tally of both debit and credit side. It should automatically tally. You don't have to add any more balance in it. So I hope this video gave you a clarification about how to solve the periodic balance method, or rather we can say the method 3 of account current. Thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.